There's no money around in the US government right now. So the price would go up, right?
The European market was on the one hand safe for consumers, right? Consumer protection being one of the main drivers of any regulatory intervention in the EU.
A lot of the cryptos being included in that Federal Reserve are, interestingly, based in the US.
Amazon, Google, like the FANG, China's been doing the exact same thing with its social market model. In Europe, we had stricter state aid rules. Welcome everybody, I'm happy to be with you guys today. We are in a video session for BeInCrypto. BeInCrypto is one of the top leading media and news and learning outlet in Web3. Today we're going to talk about a complicated subject, but with an amazing team that is going to enlighten us about it, and we're going to get out of here understanding better the subject. So subject being blockchain regulation and security in 2025. We're going to talk about compliance, privacy, and the future of crypto. Very, very useful and technical subjects. And for this, I have an amazing panel. So let's introduce all of them. We got Robert Kopitsch, who is Secretary General of Blockchain for Europe, an organization that represents international blockchain industry players at the EU level. Tommaso Astazi, who is the Policy Director of Blockchain for Europe. So we got two members of the team. Nathalie Boyke, Strategic Policy Advisor, and last but not the least, Erwin Voloder, who is Head of Policy for the European Blockchain Association. Welcome, guys. How are you?
Great. Thanks for having us.
Nice. Well, thanks for being here. We're happy to welcome you. I quickly introduce you, but what I would love, I think, would be very interesting for the crowd to understand your background and what exactly is your position and what you do. Who would like to start? Maybe ladies first. Do you want to go? I mean, I don't want to throw you under the bus, Natalie, but if you want to start, that would be a pleasure.
So I have a long track record in the financial industry and in strategic communications, and moved on to do political advisory, and in the past 2 years worked for a DAO, Polkadot, and represented that DAO in the political sphere, and bringing that knowledge to this debate.
Amazing. Who's next?
Happy to go? Or you go ahead, Robert?
Yeah, let's do. Hey, my background is out of policy and policy making. I was in the Ministry of Finance in Austria. I worked in European Parliament, then for Austria's largest bank, and then for a strategic consulting firm in Brussels. And I'm the founder of Blockchain for Europe. I'm doing this now since 7 years, and it's been a great journey. We started basically as a small group that were pioneers in Brussels, trying to tell people about what blockchain is, to a fully grown trade association that represents some of the household names in the industry in front of the European Parliament, Council, member states, Commission, and so on, in order to make them better understand the technology, but also what benefit it brings and the upsides, and also the needs for it to prosper in Europe. And that's what we've been doing in the last 7 years, and I'm glad to be here.
Nice. We're glad you're here. Tommaso, did you want to add something maybe about your background? I mean, you guys are in the same team.
Yes, indeed. Yeah. Happy to just share a few more thoughts on my own background. As I said, my name is Tommaso Astazi. I'm originally from Italy and been working in Brussels in the EU bubble around policy affair and public affairs for the last 5-6 years actually, and joined the team with Robert at the global advisory firm that we're both working at together, and started working on the Blockchain for Europe project now 3 years or something. And since then I've been leading a bit of the policy work that we do, so the positions expressed by our members, the different letters, the meetings that we have obviously with the policymakers, and the educational workshops that we organize, which I think it's also going to be an important topic for today in the way that we engage and we talk with the European institutions regulating this industry.
Guess I can round out the end. So Erwin Voloder, as you mentioned, I lead policy at the European Blockchain Association. I've been in the industry for about 10 years now. Started on the OTC and private market side back in Canada, actually. So I started my career in North America. Before that, I was in foreign relations. And in Europe, I've also worked for the European Commission and the European Central Bank. So I've done everything from competition policy and antitrust to payments, market infrastructures, and digital transformation of industry. So focusing obviously on the industrial applications of the token economy, and very broad interest in the space. I've worked closely with everyone else on this call on different files and consultations, events, outreach, and very happy to be part of this discussion.
Amazing. We have the best experts for the subject. And so, yeah, as we're going to talk about security, privacy, and the evolving regulatory landscape in blockchain. First, let's talk directly into the subject about blockchain regulation in Europe. I'm thinking about you, Robert, but obviously anybody is welcome to add their own intake. Robert, as Secretary General for Blockchain for Europe, you have a front row seat to regulatory developments in the EU. How do you see the European approach to blockchain regulation evolving, especially with MiCA coming into play?
Yeah, that's a good question because it's a quite exciting one, right? As we're engaging on this topic since nearly 9 years now. We've seen quite an evolution in the view on this technology at European level. Right? At the beginning, where nobody knew really what it was, just that it's something new and exciting. There was a huge interest from a very broad set of people. They all wanted to learn about it, and over time, as the market developed, right, there were use cases. Primarily at the beginning coming out of the financial services space, it became more of a topic that the finance and financial services part of the European institutions cared about. That also explains, for example, why, although MiCA, as the Commission always says, tries to be a tech-neutral, non-financial regulation, it came out of the financial institution, out of the institution that deals with financial services. And when you look at the take on crypto or digital assets specifically, but also non-tokenization and a lot of other things like stable coins or the travel rule implementation, you see that finance is still the dominating force in the debate when it comes to regulation, also because it's one of the most heavily regulated sectors in the place and in the market. And when you look now further down the line, what we will see probably in the future is, I think, some adjustments to a number of regulations that are touching onto blockchain empowered topics, right? Like settlement, finality regulation, securities, depositories regulation, financial instruments regulation, but also issues dealing with privacy or smart contracts. And then there's the topics around decentralization, what you do with staking, what you do with lending, DeFi, and so on. So finance is still a very dominant force in this debate, and the players that are involved at European level primarily come out of the financial services space. When you look at the ECB has some take when it comes on stablecoins. The European supervisory authorities, ESMA and EBA, deal with MiCA specifically, depending on if it's about CASPs or crypto asset service providers or stablecoins, then it's DBA. And you also hear and see debates around topics potentially on tokenization and tokenization of real world assets. And that's probably something that will not go away. And I think there's a lot of work to be done. The risk that you still have in the market is about the lack of education and lack of understanding of the substance, right? And that's where we also ended up with MiCA as it is. I think we can also debate the ups and downsides of MiCA in this call or in this podcast. But that's, I think, in short, the take on how Europe looks at it, right? Primarily from a financial services perspective, which is a pity because there's a lot of other use cases in other places. But right now, I think they're more like a secondary issue for a lot of people at the EU level. And we're trying to change that.
Interesting. Thank you. Thank you so much. I'll go into the next question if there's no comment on this, but it's opening to my next question. Erwin, building on what Robert said, do you think the EU is open to more progressive moves like the US considering a Bitcoin reserve asset, or is that a no-go in Europe?
Well, I think maybe we should start with what the US is doing. So the Trump administration made 2 announcements within the last week and a half. The first being a crypto strategic reserve where they said they would include some sort of digital asset basketing, for example, XRP and ADA. And along with that, secondly, Trump double tweeted and said, but also BTC and ETH. So the primary interest of this crypto strategic reserve was actually those 3 alts. And then, de facto adding this idea ex ante. And then yesterday we had this announcement where he signed an executive order creating this strategic reserve for strictly BTC, right? The US has about 200K BTC, which is quite a substantial amount that they've seized already, except from Silk Road and others. So whatever they do needs to be done in like a budget neutral way, right? You can't be spending taxpayer money on new coin purchases, open market purchases, etc. And there's different ways that they could do that. Now to shift over to what's happening in Europe, probably really unlikely that you're going to see any Euro system. And I mentioned specifically Euro system central bank. So the ones that are involved in clearing and settlement of euros as a currency engage in Bitcoin in any meaningful way right now, specifically because the ECB is really not in favor of Bitcoin, not as an institution. And then also there's quite a lot of individual directors who are quite vocal against it and skeptics. And they've published quite a lot of research in the last 2-3 years, poking or attempting to poke holes in Bitcoin as an investment thesis just generally. Right? Now, outside of the Euro system, when you're talking about non-Euro area central banks, like, for example, Norway or the Czech Republic, the Norwegians, I think they're contemplating an allocation directly into strategy, something like €500 million, so indirect exposure to Bitcoin via strategy because of their treasury holdings. And then the Czech central bank has also floated the idea of actually just buying BTC ETFs for spot. So I think it's going to be interesting as to whether or not that discussion accelerates, given, well, on the one side, if we've agreed on 800 billion in common borrowing for defense, which is currently the idea, that's going to be super inflationary. So maybe countries start to hedge currency risk and volatility with other things. We also don't have an idea on how much gold these central banks are buying, right? At the same time, I can tell you that over the last couple of months, a lot of gold in terms of futures from the London Stock Exchange has been shifting towards New York. This has happened before. The timing of that before is unfortunate. It was before the First World War and before the Second World War. Gold tends to move prior to conflict. And so I don't know, I don't have a crystal ball as to whether central banks will maybe start including BTC in their reserve baskets out of fear of global volatility and a hedge against this volatility. It would certainly give credence to the idea of the Bitcoin as a reserve asset or, digital gold. But if we're talking about whether the Euro system and the ECB and by default Brussels are going to follow in the lead of the Trump administration and suddenly announce a strategic reserve, I think you have a better chance of pigs flying.
Maybe in regard to this, maybe the first question should be, is that really a commitment from the US government into Bitcoin and cryptocurrencies? Because if you look at the figures, and I looked at them, you mentioned 200,000 Bitcoin, right? That's like 18 billion US dollars right now. Right. And if you look at what the total Federal Reserve has in assets, that's like 7 trillion. And in that big picture, we would have gold 10%. That's like 750 billion. And then you would have Bitcoin, which is 0.25%. And you mentioned buying, like some of the countries are announcing to buy maybe some of the cryptos, but the US is not doing that. They're not buying any further cryptos, which would be a commitment. They're just repurposing seized funds in terms of cryptos. And instead of refunding that to victims of crime or, I don't know, Department of Defense, which is working against cybercrimes and other kind of fraudulent things, they're just pushing it into the Federal Reserve. And with 0.25%, I wouldn't call it a proper hedge against anything. It's maybe or barely a very small symbolic announcement, but not really a commitment to the asset class and in itself. So what would have been a commitment or a shift would have been if they, without having any taxpayer spend any money there, right, just reallocate the existing assets, sell a little bit of gold, sell a little bit of something else, and then buy Bitcoin with it to reach to at least 2, 3, 4% to make it a real position in that portfolio. So that hasn't happened. What we're really seeing is just repurposing of seized funds that usually would have benefited victims of fraudulent activities or crime or whatsoever, or even the Department of Defense. Other than this, it's not really a commitment. I don't know if it's fair to say follow the US example, because I mean, that would just mean that Europeans would use the seized funds from crime to put it in the reserve right now. It's not a real commitment. And I think other countries have done more by actively purchasing Bitcoin and other assets, which hasn't happened in the US. If that were to change, that would have been or could be maybe a signal. Right now, it's just a really nice message, but not backed up by how do you say, significant numbers in the portfolio.
Yeah, I completely agree. I think right now it's a really good like public message that, hey, we're at least on paper giving you what you want, and we campaigned on this, and there was the Bitcoin conference and all these things, and I'm sure Michael Saylor and others are really happy. Ultimately, their problem is they have 36 and change trillion in debt, and the interest payments on that debt exceeded trillion. So anything you do has to be budget neutral. Now there's ways that they could, like you mentioned, revaluing gold. Revaluing gold would create accounting gains on balance sheet in the tune of billions.
And they have
could
other
then be
assets
repurposed.
too, right? But
exactly. The issue with them is the issue with this is if you follow unitary executive theory and Trump starts even ramming executive orders more than he has and his predecessors have, right? Because it really scaled after Bush to now buy BTC as a strategic asset. This could become a political wedge issue where if you do buy these assets, let's say they buy them to the tune of 10, 20 billion a year or something like that, those are substantial purchases. If Bitcoin goes up, government looks great, Trump looks great. If Bitcoin goes down, effectively taxpayers socialize the losses. So it needs to be done in a way that makes sense. And I also think it's a little bit premature to say that this isn't strategic now because they just announced it and they have a base to start with. Really going to have to, though, watch this over the next 6 to 12 to 18 months to see if they actually start creating, because he mentioned Besant and Lutnick would be discussing this on how they could use the exchange stabilization fund from the treasury, revaluing gold, issuing longer term debt, zero coupon debt, 50, 100-year bonds.
That happens,
these are things that are possible. But right now it's just window dressing. It's window dressing right now.
The interesting bit also is, if they would really do that, it would need to be in a coherent push with the private sector, right? Because in order to push the price up of Bitcoin, somebody needs to buy Bitcoin, right? And the problem that the crypto market currently has is it needs new liquidity, right? Because right now it's basically, we're still at this 3 trillion since a while, and that shifts up and down a bit. And in order to get the liquidity in, you need to have big investors coming in, right? Basically, you have to convince all the banks, all the big tech firms to start buying up crypto assets and ideally Bitcoin, right? In order to push the market price and keep it there. And the second thing that I found interesting is, as it says, is it good for crypto? It's like this, apart from Bitcoin and Ethereum, all the other companies are US-based companies, right? So it's not a country neutral or a project neutral approach. It's specifically focusing on the largest US projects, right? So it's like there's no European, no Asian, no African, South American, or any other crypto projects involved, or any others that are not US first or US based, right? That's also, I think, an interesting point. But yeah, it's very Trumpy, the whole thing.
Yeah. I think what we had recently, though, was a lot of the price gains in Bitcoin where it was just volatility arbitrage, right? It was hedge funds going in. They were taking advantage of the spread between the CME futures and the spot price. And when those trades started to unwind, basically, if you're a BlackRock or others, you have to cover those liquidations with spot BTC, right? And so that precipitated outflow ended up really putting price pressure down. That's why you didn't see Bitcoin jump astronomically past 100K, even though supposedly there was a lot of buy-in, but that buy-in was largely via hedge funds doing volatility arbitrage, not actually high conviction trades to hold longer term. Hopefully we'll see, now that those kind of leaves have shaken out, what the floor settles around, and then if that organic accumulation starts to take place. But to Nathalie's point, and yours as well, if the United States becomes like an active participant in the market, hoovering up Bitcoin, then if you're a trader, well, you're anticipating the government is going to buy. Like if we borrow Senator Loomis's idea of buying X amount of Bitcoin to reach 1 million BTC, that's like a tranche schedule that you can follow. And then as a trader, you can front run those trades, predicting when they're going to happen. So all of that's going to be priced in.
Another question would be just like going technical or in terms of security. If someone with such a huge budget would buy into Bitcoin and would manage to own over 50%, what would that mean for the security of the network?
That's a really interesting point.
Yeah,
think about that, because that's money market politics, right? And that could be also a strategic move of a very financially strong country buying their way into a decentralized currency. And then, it is safe and secure as long as nobody has 51%, which with a strategic reserve in the billions.
Yes and no, because that's been a long critique of Bitcoin, is that it suffers from a collective action problem, in that you have way more holders than you have full node operators. Because there's a difference between holding Bitcoin and contributing to the Bitcoin core protocol. Like, will the government run multiple nodes, to your point? I don't know.
And to an extent, we can think it could have the price of Bitcoin go down if one actor is owning most of it.
As the actor doesn't.
I think the problem that would happen is, in order to get to 51%, unless the US already holds, I don't know, 10% or can build on something substantial, is that it will cost them a fortune to own it, right? Because the market for Bitcoin today is, I think, or the market cap is like, I think, 1.5, 2 trillion. I mean, as discussed, there's no money around in the US government right now. So the price would go up, right? So it's not that they can buy half of it for like 800 billion. The market price would probably triple or quadruple in the meantime, and it would cost them a fortune to do that. And in theory, you could still make then a fork of it and leave the US with their Bitcoin, and everybody else moves on to the other half and decides that this is the new Bitcoin now, right? I mean, there's a very famous video of Antonopoulos about this, where he makes exactly fun about exactly that fact. If the NSA would take over Bitcoin, what would happen is like we would leave the NSA with their Bitcoin, and they would just spend a lot of money on something that nobody else uses anymore, right? That we know. And the same would happen here, right? So, and there's no interest in it. And I think as well, because geopolitically speaking, I think you rather have a bigger share of something global than everything of something that is limited to the US, right? I mean, the US is not a dominant factor in forex trading it's the reserve money of the world, right? And it has the risk of losing out on it. So Bitcoin is basically a hedge against that, so that they have a bigger stake in potentially the next reserve currency of the world or reserve asset of the world, right? And the sooner they come in, the bigger this share will be.
Well, unless they're looking to make Bitcoin the backstop for as a digital FX anchor, future digital FX anchor, which, okay, does make sense. But I mean, it's almost like we're trying to reinvent. Yep.
No, but the other thing which I find much more interesting is this is a very, very much of a Trump play, right? This might work for 4 years now. The next administration, let's assume Elizabeth Warren, for example, becomes next president of the US, and we know her position on this. She might reverse all of that. And so there's a certain level of uncertainty to it, of what the US will do, right? It's not that once this is done, this will stay like it. I mean, right now, US politics is like, we come in, we reverse everything and get rid of everything our predecessor does. And there might be a chance that in 4 years, we have a Democrat president again that does exactly that the other way around, right? So
I mean, right now,
that's another factor that's important, I think.
Right now, they didn't buy anything, so probably Elizabeth Warren would just give it back to the Department of Defense, and that's about it. Back to the departments that work on cyber security and all these kind of cyber crime, not security. So
I mean, we basically
right now,
we're basically commenting on a high-level PR stunt so far, and I agree with you, Nathalie. So far, nothing happened.
It's very interesting, fascinating intakes. And when I was asking the question to Erwin, I thought about Nathalie's post that I saw before the podcast about the US Bitcoin reserve. So I thought you'd be making a link, and that was fascinating. Do we want to go back a bit more in Europe, or do we want to add something about the US? I have a question for Tommaso then, because with your experience with the EU blockchain policy, do you think MiCA provides enough clarity for crypto businesses, or are there still major gaps that could cause friction?
Yeah, thanks, Victor. I mean, I think the discussion on what is happening in the US and how it impacts the European market is clearly an interesting one, right? But then when we focus on the EU perspective, which is in the end what we are looking in the perspective, the lenses that we usually have in the work that we do here, obviously we have had this, let's say, major achievement of at least introducing this major regulatory framework, comprehensive framework that covers basically everything that, at least from a financial services perspective, as Robert was explaining at the beginning, should have been introduced in terms of regulation of these new crypto asset service providers, this new class of providers providing crypto services, right? And I think what's interesting to look at or to chat about is how we got here, right? How did we get to this point? And to answer your question also on, did we achieve this regulatory clarity and legal certainty that in the end was the original objective of MiCA, right? And the whole point was that before MiCA, in a pre-MiCA world, we had 27 different jurisdictions and different approaches to the regulation of these new actors coming up in the markets, very diverse approaches that went from literally no registration needed whatsoever, to very strict AML and compliance requirements already applied to the crypto sector. So obviously that means, as fragmented market means that it's a market that cannot really develop or really become as big as what we were, just talking about when we look at other jurisdictions, other markets, right? So the European Union very much in the traditional way and how it approaches a lot of these topics from a geopolitical point of view, right? Looked at this new industry, this new technology, started thinking about, okay, this is something that it might be interesting, it might be relevant, it might help with our competitiveness. And this is actually the new buzzword now. A few years later, those discussions even started. But it was always about that. It was always about, it's expanding or making sure that the European market was, on the one hand, safe for consumers, right? Consumer protection being one of the main drivers of any regulatory intervention in the EU. But then at the same time, the other untold part of the story is really, let's say the market structure and security and the implications that this technology, as we were just discussing now on the comparison with the US and everything that is happening with the reserves discussions, this might actually impact the financial stability of the markets in Europe and so on. So it was really, I would say, we can look at the story of MiCA and how we got to where we got, and the situation we have today from geopolitical point of view, right? We can look at it from a market developments point of view, where obviously these new, especially stable coins, were being launched, discussed, presented as projects. As we all know, Libra or Diem, the Facebook run project that was talking about a new digital asset, basically a stable coin, was very one of the key drivers for the European Union to actually even propose MiCA in the first place, right? Because they said, okay, wait, we have big tech companies that are now able to issue a privately issued digital asset that will be able, every user, every citizen in Europe will be able to access to, this digital asset through Facebook, and then be able to use that asset to pay for services and goods in the European Union without really going through the euro anymore, right? So there is also a very important monetary policy perspective in this story. So when you put all of this together, and to try and also answer your question, when you put all of these different factors together, it means that you're also putting a lot of different interests together, a lot of different stakeholders, a lot of different institutions that somehow wanted to have a say in this process, wanted to influence the way that MiCA was being drafted. And that's basically, I guess, in summary, how we got where we got today, because of all of these different cooks, let's say, in the kitchen, right? Different influences. Also, there is also a lot of discussions around how MiCA was initially influenced a lot by, for example, the French experience with their own regulatory framework, the PSAN legislation that was pre-MiCA, and somehow influenced a lot the drafting of the text. So we ended up with a text, with a level 1 text, as we call it, which is also important to keep in mind. MiCA is a level 1 text, which somehow is not perfect. There is a lot of questions when you go and read the provisions, the language. And this also comes, I think, from another important aspect, which I'm sure we're going to touch upon today more, about the level of understanding, education of the policymakers involved in that process, right? We always, and I think the people that you have on this call are all and always been working with the idea that the most important aspect is the education that we need to provide, that we need to share the information about this technology, that we need to make sure that reaches the right people, meaning the people that are then called to regulate that technology.
Can I add something? Because you mentioned legal certainty, and I want to ask or raise the question now, with Trump having taken over, where is really the better regulatory environment for a crypto company or a blockchain? Europe, if you compare Europe and the US, I mean, I don't know Asia well enough to make that comparison. And I want to ask the question of legal certainty. Do we have, a big benefit for a lot of startups is knowing and having the safety of knowing, I'm here, I'm legally accepted, this is a framework I can work with. And this is what MiCA provided, as you just explained, right? But do we have that right now in the US?
Try to.
Trump says a lot of favorable things about crypto, but also it's very arbitrary. We don't have a law yet. And it seems like it will be a bit arbitrary, and depending on, are you in the US? Will all blockchains be treated the same based on their technological traits? Or will it be about political reasoning? Are you based in the US? Are you big spender on political parties? Are you, will it be legal certainty for a lot of the industry? And then you have to consider a lot of the industry, or a huge USP of the industry, is being decentralized. That's actually risk diversification in terms of cybersecurity, in terms of a lot of other things, right? And being decentralized in nature means also globally diversified nodes and servers, which by its definition would mean not being based mainly in the US. Yeah, you can do cosmetics, open an office, but then again, if you're decentralized, that comes, with questions of liability, X, Y, Z. So do we have a framework in the US now where all blockchains and companies would be treated equally defined by a law? Right now, we don't have that. There is something in the making and we can discuss it, but then a lot of the politics right now seems very arbitrary. And I think Robert mentioned before, a lot of the cryptos being included in that Federal Reserve are, interestingly, based in the US. So the question really is, where do projects overall, despite of all the marketing that we hear right now from the US, actually fact-based have a better starting position to start off? And I mean, maybe the answer is Asia in the end of the day, but if you want to stick between the two Western areas, then maybe Europe is still slightly better bet, because at least you know what you're getting into.
Look, I was probably going to end on a similar direction, right? I think when we talk about MiCA, there's a lot of people complaining, right? And it's fair enough, because as we all know, there is a lot of complexities, right? As we were saying with this, especially when you add the level 2 and level 3 measures, right? We're trying to somehow, through these level 2 and level 3 measures that are being pushed by the European supervisory authorities as mandated by MiCA most of the times, when they don't really overreach or go beyond their mandate. This is creating a lot of additional questions when it comes to this question of, do we have legal certainty in Europe even, right? But that promise of legal certainty is at least the driver that the European Union used to push this process through and to try and attract all of these businesses, which, as we were saying, would love to have certain legal certainty, especially when we were looking and comparing with the US, where legal certainty was not even on the horizon, right? I think what's changed in the past, few months, of course, when looking at the US, is that at least now there is this understanding that at a certain point in time in the future, there might actually be some clear rules, as you were saying, probably arbitrary, and probably will also depend a lot on how much you've been somehow supportive of that process. If you're a company and you want to somehow be well respected afterwards in the future regulatory approach. But I guess businesses at this point, they're very curious, right? They're very much more curious than they were in the past year, where they knew that actually trying to operate in the US will probably only cause you to have a legal fight with the SEC, or generally speaking, continuous questions on whether you are providing regulated services or if you're using the right licenses or things like that. We all know that the regulation by enforcement approach that the SEC had been taking in the past few years was obviously not working and was not providing that legal certainty that we're talking about. Now, the question, who will be coming on top? That's, I think, the $1 million question, or the 10,000 Bitcoins, whatever. So I think that's probably the most important question that we have and that we're looking at in the next few years, right? Will the European Union attempt of providing this legal clarity actually invite companies and encourage them to come and establish in Europe, especially when you look at the other aspects, right? Legal clarity, legal certainty is a super important aspect, but it's not the only one. And this is probably where also our conversation might end today, on what are the other causes and problems that the European Union might have when looking at why are we lagging behind in terms of startups, in terms of tech companies, in terms of our strategic dependencies on foreign providers for infrastructure and things like that, right? Digital infrastructure. So, it's a big question, I think. I think, again, just to conclude on this idea, MiCA has tried to provide legal clarity, right? It's not enough to answer Victor's very specific question. I don't think it's enough yet. And this is why we continue working and we continue engaging with all these stakeholders that we got, that we mentioned just now. And there are major gaps. And I think we mentioned a couple. We're going to be talking about a couple more. Probably the decentralization question remains the most interesting one, to really see how will decentralization be defined in the European Union. meaning what will be the actual regulatory perimeter of MiCA and which entities will be forced to comply with it or not. So a lot of interesting questions there, a lot of interesting questions on stablecoins, as we all know, on payments and e-money tokens and wallets. So yes, not yet there, Victor, I think, but at least from a personal perspective, I think the European Union has done the right steps. And now we just need to make sure that we let them play out, right? We let the regulation play out. We let the rules actually work in practice. We see how they work. We see what the problems are. We see where the challenges are for businesses and for authorities, right, in implementing these rules. And then we can reconsider, reopening this set of rules, because there is already people calling for a MiCA 2. And I think we all just crying in our sleeps when we hear about those calls, because it's really like probably the worst thing that we could do right now is to reopen the rules, rediscuss them again, reevaluate, even though we haven't even seen how these rules are playing in practice, right? So I think that's where I will close it. Just let them play out. Let's see what we can solve and address afterwards.
Could I jump in on this one, Victor? Because I obviously I agree with both of you are saying, but just maybe to step back, like I think the problem with Europe is that over the last 15 years, it was maybe naively believing in open markets a little bit too much. If you actually look at the United States and China, it's been statist interventionism in supporting their tech sectors. Massive subsidies, especially in the States, towards Amazon, Google, like the FANGs. China's been doing the exact same thing with its social market model. In Europe, we had stricter state aid rules. Competition policy was really tight in that regard. These things are now going to need to be kind of unwound so we can meet the challenge of the day, maybe on more equal playing field. So this is why, for example, we didn't win the cloud race or the browser wars or the social media wars or anything else, is because we were playing with one hand tied behind our back, whereas the United States wasn't. And if you look at the Inflation Reduction Act and the CHIPS Act, those are massive protectionist policies that favor huge windfall subsidies to U.S. companies. Trump's just continuing in that line, saying, listen, you come here, we're floating the idea of a zero capital gains tax. There's going to be, if you don't want to do business in the United States, guess what? Effective tariff rate, like 10 to 20%. So we'll indirectly tax you if you don't want to set up shop here. So for the companies that were thinking of setting up in Europe, because of the lack of regulatory clarity in the United States, for them now it's also a question of, if I'm going to invest into Europe, but I'm getting a sweeter treatment back home, and I may also be punished for doing business abroad, do I stay abroad? Like, how much do I actually invest into my global expansion strategy before settling my core? And how much can I, for lack of a better word, suck off the government and get as much as I can from the benefits of these favorable policies for domestic firms? Because this is protectionism and neo-mercantilism par excellence. This is the world we live in today. And crypto is just another battleground in that front. But if you look at, for example, you mentioned stable coins, and and Nathalie, you also mentioned that a lot of this is right now just arbitrary because there's been announcements and there's been bills that have been proposed and carried over from the last congressional cycle, but nothing really. Exactly. Look at the Genius Act, right? It's got a significance regime the same way that MiCA does. It actually mandates higher capital buffers, 10% versus 3% for what MiCA has on own funds. It's got an identical model for banning rehypothecation. It's basically like a MiCA light on Article 3 and 4. But the problem is, if they start from there, by the time it actually makes its way through Congress, it's going to get watered down and watered down and watered down. The actual law that they end up having may not even be as nice as that. It could be less. The only thing I will say that the United States has a significant advantage of is its exorbitant privilege, because they can print money as much as they want and backstop it with treasuries. If they create any form of a tokenized money market, where they basically take the ability to earn yield on stable coins, which would then de facto be M3 aggregates, they would be money market funds, they could backstop a digital dollar and they don't need to do anything else. And if they manage to do that successfully, they will blow by Europe and by cloud, because their position in the global economy is such that they don't need to do anything else, right? So the fear for us, I think, is that we have enough brain per capita in Europe. There's no shortage of money in Europe. It's just not moving, but there's no shortage of funding in the private or public sector. Those things need to be done in a way that is more competitive. And I think ultimately one issue potentially that could be around MiCA, but this is generally an issue of regulation, is that it'll favor larger incumbents,
rather than smaller players, right? Because compliance is super expensive. And if you have to have a lot of these things in place before you're even issued or authorized, pardon me, then that could be problematic. And for leaner companies,
the same in the US with the favoring the bigger, more established ones, because even in the US, you would have to get an SEC, CFTC kind of certification.
No, definitely. And you know where else? In the influencing of the of the Congress, right? I mean, the deeper your pockets, the more influence you have, right? You can literally buy yourself a congressman or a senator if your pockets are deep enough. In Europe, you cannot do that. You end up in prison, right? It's totally illegal.
If you want to operate
you can
in
do
the
it
US,
at the member state level.
you have to be ideally based in the US. Again, a lot of costs. You have to maybe be a big spender on a political party. You will have to do and pay a lot of the lawyers, expensive American lawyers, to get your license with SEC and CFTC, whichever will be in the end deciding that. And then, so I think it's much harder for a small beginner startup in the US because Trump's whole policy is favoring the big ones in a way.
Who have already paid him.
Who already paid him.
Who
Exactly.
already
So
bought
is
their
that
ticket
really
to the
opening
dance.
up an opportunity for other markets to kind of create an environment for small startups to rise up? Is that an opportunity for Europe is the question, because I mean, still you need a license here, but it's maybe more doable to get in than in the US.
I would disagree. I think that building a company in Europe is much harder than it is in the States.
I
I think
the
access to funding is, first of all, 32%.
Okay, but legally speaking, policy-wise?
Yes, but before you get to legal, you need to have a company that has some sort of liquidity, and 32% of funding comes from non-bank sources in Europe versus 80% in the United States. So like equity-based financing models are so developed, but that's because Europeans don't spend, we're not a credit consumer economy the way that they are. And this is part of that whole model, right?
Not
Like
just
we need to
that,
get
I think
smarter.
it's all, sorry, because I might have a delay. I don't want to speak over anybody. It's also because our single market is not fully grown, right? I mean, let's be honest. We always talk about the European single market. I think we have a part sectorial single market on some things where it works well, and on some other things it could be better. And in the US, it's just one country, right? That's, I think, the biggest advantage.
Well, Robert,
apart
look
from
at the
fact-
case of, we're not a full optimum currency area, no matter what the ECB says. It's not the case.
Yeah, that I think is not so much of a problem, because you can still money in different currencies. The bigger issue is that
is the liquidity fragmentation. But look at what happened recently with UniCredit and Commerzbank. It's all fine if a German bank is trying to buy a controlling ownership stake in an Italian bank, but if an Italian banking conglomerate tries to do it the other way around, and the German government goes and complains in the council. But that would have been like case in point in the capital markets union philosophy and deepening capital markets and cross-border integration and reducing liquidity fragmentation. But there's the political dimension of this as well.
The thing is, Europe works or is driven by crisis, right? I mean, we're very convenient people. We like how it is. We're not big fans of disruption and change. And the only time we change significantly, not that we're not changing at all, but I think where we really want to disrupt ourselves is when there's a crisis, right? And whereas a fundamental change in our world system. And I think currently with how Trump behaves, this is a moment where this could happen. Doesn't mean that it will happen, it will be perfect or anything, but I think with the shift in power dynamics and the shift away from the NATO alliance that also dominated, our economic thinking, Europe has an opportunity to be more self-reliant and basically lead by example the way we want, and not following somebody else, right? The question is, will we pick it up? Will there be alignment at political level? Because in the end, it's a political decision, right? But I think you see that there's willingness to do that on the security and military and defense side. I think with Trump, this idea of decoupling from US is growing, right? There's a new input again that Asia could be on equal footing with the US, right? China is not that evil as it looks when you look at Trump nowadays, and so on. So there's a lot of rethinking our own world position and our importance in it, right? I think Europeans in the last decade traditionally overstated their own importance on the world stage. And I think the solely settling of the realization that we're not the center of the world anymore, but we're just part of the world. And we have an opportunity now to become more self-reliant and self-dependent, right? And of all the things Trump does on exterior politics, I think that big opportunity here for Europe to just decouple and do it themselves. And I think regulation is a good example, right? And the way we handle things here is sometimes more complex and overburdening than in other places. But in the end, I think our biggest strength is the rule of law. And there's a reason why Europe still matters, and it's because we probably have the highest trust in our judicial system in the world, because our rule of law works. And that's the biggest strength. And I think we need to build on this. And regulation, including the one on crypto, is a part of that. Just to go full circle again. Otherwise, we're having a geopolitical discussion here, guys. Macroeconomic rather than a policy one.
In the beginning, Robert, you made a really good point. Like in your intro, you said like a lot of the regulations focus merely on the financial aspect of the technology, right? And with all the geopolitics going on, I do see a chance also for Europe to consider the benefits of the technology, like the cryptography, the decentralization, which is literally risk diversification also in terms of security, right? And with a bigger focus and importance on security, like you just mentioned, I do see chances for the technology in being maybe more embraced as cybersecurity assets, as more privacy-preserving technologies. And I think the nature of its decentralization will play a big role here. So I don't know how you guys see that, but I do think that this could be also an opportunity to step away from regulating the risks of the technology, but also maybe going and stepping towards embracing the benefits for our society and our environment.
I mean, we're by nature a federal environment, right? So decentralization would be in our blood. Sorry, did I speak over somebody again?
No, go ahead. I'll go after you.
I totally agree. I mean, we're having these discussions with a range of people, and you know who I mean, all of you, I think. There's an interest in certain parts of the European society and the policymaking circles that sees value in decentralization, because it's equivalent for a lot of them to how cooperatives work, how the federal system should be structured, right? I mean, the Swiss were for a reason the first that embraced the technology, because it mirrors to an extent the Swiss state building and governance, right? Where it's like the trust of the many rather than a centralized point of entry. And I think slowly over time, also with the adoption by younger generations that grow up with their wallets in their hands and their crypto, this will just grow more and more as a mindset. The question is when the economic powerhouses in Europe adopt it, right? Because they would profit the fastest and the most of it in order to generate new business models and de-risk, basically, right? And they're currently in a place where they need to make those decisions. And I'm very curious to see what decisions they make. And that will be a key one, among others.
My own personal pet theory is that we'll see it in two verticals probably before we'll see it anywhere else. The first is, don't be surprised if you start seeing blockchain applications in defense become a lot more popular. Using cryptography and minimal disclosure and ledger immutability for whatever defense purposes. And the second is circularity. You mentioned environment, Nathalie. I think Robert took it in a different direction, but I mean, look at digital product passports, right? It's part of this idea of a more circular and green economy, of reducing waste and having more transparency over supply chains and understanding where goods and services are actually coming from and from who and how. And so the DPP, I mean, even though in the DPP regulation, blockchain isn't explicitly mentioned, but if you look at the service providers that are active in Europe, whether these are, luxury conglomerates or these are smaller startups that are working in different sectors, it's like the natural choice of technology for something like that. Like it was almost made for it. And I think it's really going to be interesting to see. Yes, we've seen a shift in the green policies towards cutting down ESG requirements, but I think one thing that companies are not going to cut down on is the ability to use DLTs to save money. And if that also is the secondary benefit is for the environment, then great, that's a double whammy. But I really think that this is a way that Europe can still not neglect the green part of the digital and green transition, but also do it in a way that's more sustainable politically and economically and socially than the first go around over the last 5 years, because a lot of people became really kind of disenfranchised with that part of the transition because it was, to be honest with you, mishandled by politicians. And one thing I'm a little bit maybe jaded about is that there's a lot of focus now on AI. AI is like the new, the new toy, the new shiny thing that everybody wants to kind of put their stamp on. And we don't see so much communication on blockchain and on Web3 coming from the institutions, at least this cycle. So I think that's also a potentially a missed opportunity where the education, definitely to your point, Robert, and Tommaso as well, you mentioned that, you know, our first goal for all of us is education. We really need to keep pushing that narrative to make sure that politicians don't think about AI in a silo or blockchain in a silo or IoT in a silo, that these things are transversal. They will be part of a future, to borrow from recent comments from other experts, a future Euro stack, hopefully for technology. And that's what we can, you know, aspire to anyways. That's the biggest chance Europe has, sandwiched between, you know, a China and the United States.
It's great because I knew you guys would explain and enlighten us about Europe, but you also explained what we need to know with the US. So thank you so much for your points. We're lucky to have you guys. Let's talk about security and privacy, if you may, in blockchain. Now, Nathalie, I'm thinking of you on the subject. Privacy is often misunderstood in regulatory conversation. So how do you see privacy-preserving blockchain technologies actually strengthening anti-money laundering efforts instead of working against them?
I think you have to separate two kind of technologies in that sense, right? So there's privacy-enhanced technologies where you use zero-knowledge proof for efficient and maybe targeted or selective sharing of data. So you have the opportunity now to do anti-money laundering, and you can share, like, ask some user to share data, and they don't have to share all the transactions they've ever had, but only the actual relevant ones, right? Imagine, and I think that's a huge also benefit for governments looking into the AML. They don't have to go through so much data anymore. And also the user wouldn't have to share all their data and gets to have some sense of privacy. So I think that by nature, the technology is end-to-end traceable, which in itself would actually suggest that it is more traceable than any fiat cash money there was. And I think more and more regulators understand that, and there is a whole industry evolving and making a business out of that traceability and in actually creating anti-money laundering tools that are more efficient and allow for the tracing of funds on blockchains. The other aspect that, and I think this is where a lot of fights are being fought about, is what about public permission privacy preserving tools where there's no oversight, like mixers or actually anonymity providing tools. So if you think of privacy, I mean, blockchain itself is not providing anonymity, difficult word, but pseudonymy. So yeah, a wallet has a number, right? It's not anonymous. You can trace that wallet. You can trace its transactions. Being anonymous would be losing that trace. So there are tools, and I think a famous one was Tornado Cash that provided that. And I think it's important that we do have tools that provide that, because I think none of us wants an internet where there is end-to-end traceability without any privacy layer. And the question is, do we have a right to being anonymous? And this is where it becomes a value debate, right? When you talk to developers, they will tell you privacy is binary, right? It's either there is a backdoor that's not really private, where you would allow a regulator, for example, to kind of peek in if they see fit. That's a backdoor. That's not 100% private. Or there's no backdoor, then it is private, but then you will probably upset some regulators that want full-on control. The question is, should we have a risk-based approach here? Let's say 100% of internet users or citizens exist and use privacy preserve or have a right to privacy. Let's say 5% of them are bad actors, which probably they are. Should we deprive 95% of all users of that privacy just to catch 5%? It's a moral question. Where do you draw the line? There is, of course, legitimate reasons for law enforcement to catch bad guys. And there should be tools, especially for companies, to avoid fraud. And there is technology, zero-knowledge technology, that allows for selective sharing of data. But the other question, and the moral question here, is, should we allow for anonymity-preserving privacy tools in the internet? And I think we should. If we're trying to prevent crime also in the internet, this privacy will protect a lot of users. So that's my stance on that, I think. And I think a lot of human rights activists would appreciate that. And the moment there is a backdoor that that basically requires trust. You basically rely on whoever that actor is to be a good actor. And we've seen, and a lot of regulations evolved because you cannot trust, and you need regulations to kind of check on independent intermediaries. So if you remove that, that should be a benefit actually, and reduce regulations.
Thank you. Awesome intake. And continuing on the topics of security, I would like to get to your point of view, Erwin. We've seen increasing concerns over fraud and cyber threats in crypto. What blockchain innovations are emerging to address these challenges?
I mean, we saw that most recently in the Bybit hack, at least from a PR perspective, was probably a masterclass in terms of handling that. I mean, you had the CEO on and in a live Q&A for 3-4 hours as soon as it happened. And then you had all these intelligence firms like TRM, Chainalysis, Elliptic, etc., who were, fast to work on doing the traceability for those transactions and trying to see where those money flows have been going and how that could potentially be reclaimed. So I think that from that perspective, there's a lot of on-chain analytics platforms that are super active and that work with FIUs, so financial intelligence units, and they work with law enforcement agencies and with governments on this specifically. Aside from that, I just want to bring it back to the mixers question, because this is potentially an existential issue if we don't get it right. There's a lot of, you mentioned human rights activists, Nathalie, a lot of these people are relying on mixers for anonymous donations in jurisdictions where potentially they don't have a strong rule of law or democracy or human rights protection. And suddenly having those transactions out in the open would put these people probably in a very dangerous position for their lives. So I think that there's a potential for banning mixers to just protract the democratic deficit that exists in some areas of the world and make it even more punctuated. It's like the road to hell is paved with the best intentions. Those people are already living in some form of a hell. And so you shouldn't want to pave the concrete anymore for that. You know what I mean? We're trying to extend them a lifeline. Bringing it back to the security, I think that ZK's, so zero knowledge technology in general, has a lot of benefits beyond just selective disclosure for that purpose. Because if you're thinking about computational scaling, and if you think about this convergence of AI and blockchain, there's a lot of work being done in zero knowledge machine learning. So, you have companies like Socrates or programming interfaces like Socrates and other ZK Sync, etc., that can offer this. But the idea is that when you have machine learning algorithms, those are like nested statements on nested statements on nested statements. That computation is super expensive. So if you can bring some of that off chain, you can handle that computation and batch it. You, first of all, drive down the cost. And second of all, you also improve the ability to, let's say, kind of overcome some of AI's internal risks through the rigidity of smart contracts, because smart contracts are rigid environments. They're essentially sophisticated yes-no statements, right? And so you can kind of taper or balance those negative externalities on some of these more sophisticated ways to handle computation with zero knowledge tech. I think in terms of the AML question also, we have the transfer of funds regulation in Europe, and we have travel rule obligations, which we have one of the strictest interpretations of the FATF travel rule anywhere in the world. And so the requirements for transaction sharing and data between owner and beneficiary CASPs, you can really solve a lot of this with on-chain attestation. So, for example, like embedding the token URI, the UID, and other information into on-chain attestations is a way to actually maybe streamline TFR compliance in companies. Because right now, that entire environment is fragmented. You have service providers, or you have consortia between large exchanges that kind of handle their own environments. There's really no white label solution for the industry. And a lot of this tech is open source. The GitHub repositories for these things exist. So a lot of this stuff could be built in a more open and collaborative way. And in terms generally, when it comes to network security, I still, when we want to talk about consensus algorithms, there's still no beating Bitcoin. It's the most secure network that we have, period, right now, specifically because it's so computationally expensive to try to hack it, that even a nation state, it doesn't make sense financially for you to do it. So I think this is one of the issues with proof of stake and with other networks, proof of authority, etc., that you may have, that you don't have with proof of work. The issue with proof of work is that the halving schedule and the energy intensivity is itself a factor of that compounding. And so this is something that's going to be an overhang that'll, I don't know, will you need a nuclear reactor eventually to mine a Bitcoin? Probably. probably you already need a hydroelectric dam now if you want to run a full node and you mine a full BTC. Mining pools, the way they used to work, like the payment schedule for mining pools, pay per last N number of shares or whatever you were doing, you could run, like back in 2019, I can tell you in Canada, it was like probably between 80 and 150 grand a month in electricity costs, depending on how much you were getting, how many kilowatt cents per hour you were getting with demand charges. Now you need a hydroelectric dam to be able to mine a full BTC, really. So it's something that we as an industry also have to face, is that the more people go online and the more adoption we have and the more networks scale, this is also a challenge in terms of resource and compute, because compute is scarce, right? And compute ultimately is what you need to secure networks as well. So I think that the combination of cryptographic achievements and advancements, and for example, like fully and partially homomorphic encryption in combination with, for example, zero-knowledge proofs or Merkleized credentials or things of this nature, are robust means of ensuring security. But we've seen with recent hacks that even like multi-party computation and key sharding is subject to hacks. If you can trick the signers with the right information, they'll sign transactions that they otherwise wouldn't. So I think there's still a lot of work, but thankfully there's people much smarter than myself working on these things, and I can just hope that we reduce the likelihood of those hacks in the future.
Thank you, Erwin, for your intake. I would like to close that security and privacy subject with Tommaso. Given the regulatory push for transparency, do you think policymakers fully grasp the balance between privacy and compliance, or is there still a lot of education needed?
Well, the answer to this one, if we stick to that, just the actual question, is no, they don't yet understand fully or grasp fully the difference. And yes, there is a lot of education needed. So that's the short answer, right? The longer, I think it's obviously something that was already being touched upon also by Nathalie and Erwin, right? So all of these technological understanding that is actually needed to really grasp what is going on with blockchain technology, with transactions on chain, with blockchain analytics, and how can this be really traced. And so I think, my colleagues here, they made a lot of very relevant points and examples of the type of discussions that we've been having with the policymakers, right? The main one being anonymity, like the whole misconception around the pseudonymity that is actually provided by the blockchain. That's not something that policymakers understand. They just assume that it's the same thing as being completely anonymous and untraceable. So that's really where the conversation often starts. Honestly, when we look at this question, it's probably fair to say that we're actually talking about two different sides not understanding each other. And I think this is quite, it's also fair to say when it comes to the crypto side, to the blockchain, the technology side. So the regulators, as we're just saying, they don't understand the technology, but they also don't understand the users and why they seek privacy, right? And this is something that we often, the misconception that you would only seek privacy if you had something to hide. And this is completely wrong, as we were just saying, because we find ourselves, when we look at the on-chain transactions and the activities that we do on-chain, it's not the same thing as regular transactions or financial transactions of assets, in the way that there is no that same level of transparency about what we do. So why should we just allow anybody to see my full transaction history once I, for example, use my wallet once to buy a pizza from a merchant, right? If I will do that with no further privacy protection, that merchant will be able to see my full transaction history just because they have my wallet address. So these concepts, which to people that are somehow already operating in the space for a few years or whatever, it's quite clear, right? It's quite straightforward. But it's really something that it takes some time for people that have never faced these questions or these aspects and issues to actually understand these differences and challenges. So that's the first part. But then the second part is it's also the industry that sometimes doesn't understand why the regulators are seeking that type of information, why the law enforcement agencies are trying to, basically use the technology somehow to find malicious activities and transactions and so on. So there needs to be a better understanding also on the other side on what exactly is the mandate of these authorities, why they're doing what they're doing, so that it's also easier to go back to them and respond to them and say, look, if what you're trying to achieve is to fight, money laundering, well, let's understand together how to do that. right? Let's understand how can we use the technology and its fundamental characteristics to actually achieve that same policy objective, right? Because that's a policy objective. We want to fight money laundering. We want to fight terrorist financing, whatever that means. We want to somehow make sure that we know when transactions are going to places that we believe are, illegal or somehow are engaging in in criminal activities. So if that's the objective, there is ways to do that. There is ways in which we can preserve that level of privacy for just regular users, but at the same time give those tools and instruments to the agencies and authorities to actually achieve that objective without, again, infringing on anybody's privacy. So I think that's really the main focus of the work that we do, how to educate about this, right? About these questions on privacy in a regulated environment. And I think that's also, there was some very important papers on this topic in the past couple of years, which really try to elaborate on this idea. How do we maintain a certain level of privacy in a regulated space? Because this, in the end, this is what we're trying to achieve. This is the type of conversation that we, as a trade association, at least speaking on behalf of Blockchain for Europe, we focus on how do we create this regulated environment where this technology and this sector can thrive. Users are safe, market stability is maintained, and all of those amazing policy and very important policy objectives, right? But it goes back to this point of we can achieve those policy objectives in different ways. And I think this is a theme that is coming up a lot in our conversations, right? It's a new ways, a new industries, a new way of doing things. And sometimes it's all about just understanding that and making sure that the regulators, the policymakers, the decision makers that are looking at it, that actually get a better level of knowledge around all of these questions and technology.
Great. Thank you, Tommaso. Now that we understand better security and privacy in blockchain, thanks to you, let's move on to the next topic, the future of blockchain regulation and adoption. I'm going towards you, Robert. Let's look ahead. What are the biggest trends in blockchain regulation that would shape adoption over the next 5 years, according to you?
That's a very good question. I think there's at least two that I think at European level will take place in the upcoming years. The first one is around tokenization, and it will probably start with debates around tokenization of financial instruments, but also tokenization of real-world assets. And I think we will revisit also the topic of NFTs. These conversations will be done properly and implemented properly. I think accelerators for, as we call it nowadays, a savings and investments union, or formerly known as capital markets union, where I think it will help companies to access private equity or capital. And the regulators that are looking at it, I think they're quite enthusiastic about it. There's a large demand on the side of the countries with big banking or capital market sectors. But I think there's also a huge opportunity outside this sector to actually develop something that will help Europeans get better access to capital markets, right? And I think tokenization is one thing that will drive that a lot. And I'm quite excited about this topic because I think it has really the potential to change how Europeans interact with capital markets. But also it will empower a lot of SMEs, artists, sports companies, pretty much anybody that offers a product or a service that can be tokenized, right? And it will democratize the European economy even more. And I think it has huge potential. That's the first one. The question of decentralization, I think, is the second one, right? And not necessarily only DeFi, but I think anything that will decentralize infrastructure. And I think there's debates about this for quite a lengthy time already, mostly on the specific issue of DeFi. But I think regulators, driven also by the industry and by needs and the geopolitics, will look more and more on how to implement decentralized business models, decentralized solutions, create decentralized infrastructure. And that needs probably some rules. The question is how many and how they will look like. That's a completely different debate, and I think is equally important. But I think decentralization will be a very key driver in the regulatory debates in the years to come. I mean, privacy was mentioned earlier. That's definitely something that will be on the table as well. And then I think anything that touches on the topic of security and defense, I mean, decentralization might be such a thing. There might be the encryption, as mentioned earlier, I think by Erwin, that will have a huge impact. I'm not sure how much this will be part of regulatory debates, but I think from a political and economic perspective, I think it will play a role. But I think if you would nail me down on which the key trends are, where regulation will play a role in the blockchain and digital asset space, then I would say tokenization and anything touching decentralization as a major themes, right? There will be probably debates around sustainability and cybersecurity and so on, but I think these will be major themes because they're basically horizontal discussions, right?
Thank you, Robert. Thank you. On that same subject, Nathalie, if you could right now change one thing about how crypto regulators approach crypto today, what would it be and why?
I think I would love them to approach it with an open mind. People from the political side come in with already preconceptions and already kind of looking for the problem instead of just being open to hear maybe the positive aspects of it. So they're kind of asking with the aim of tearing it apart rather than understanding and maybe seeing the potential. So yeah, the one thing I would ask for would be come in with an open mind. That would be the biggest wish. And then I think a lot of conversations would go differently.
Nice. Thank you. And now I do have a question for all of you. Where do you see blockchain regulation heading towards by 2030? I know it's 5 years from now, but in a way it's only tomorrow. So it's a very easy question to ask, but it's not an easy question to answer.
Do you want a wishful thinking or do you want like a realistic perspective? Because that's a bit different.
I mean, I would love to know your wish as well. But yeah, I meant something that you think that can realistically happen.
I mean, I'm happy to start unless somebody else wants to go first. Realistically speaking, based on what I said earlier, right? Because if I make a complete U-turn on what to expect, I think it will be around those topics. And don't forget, tokenization also touches monetary aspects, right? When we mean tokenization in this context, we also talk about tokenized money. So I think what we will see in 5 years, hopefully, is regulation and an European economy that is vastly more decentralized than it is now, and a much more diverse ecosystem, right? I think the state structures will have changed. It will be more transparent in the sense as outlined by my colleagues, right? Where we have zero knowledge proofs basically managing our world, and where we basically can be pseudonymous in the economy, while giving the regulatory certainty to supervisors and regulators that what we do is legally savvy and not criminal. And I think we can literally, through the trust in technology, and it's not just blockchain, increase the life of everyone, right? I'm a big optimist that everything that's on the table, if used wisely, can benefit the societies in Europe. And that's also why we all do what we do. We want to create an environment, a regulatory environment with our peers in the parliament, in the council, and the commission that will make the lives of every European citizen, every European company, SME, teacher, lawyer, whoever is participating, easier, more convenient, safer, more prosperous. And we believe strongly that, I think I can say that on all our behalves, that blockchain is a key infrastructure technology to achieve that, right? And in order to do that, we need soft touch regulation, principle-based regulation that allows for innovation, allows to be more competitive again. And I think we see a slowly change in this. And I hope it's not just a momentum shift out of panic or of lack of alternatives, but really a shift of mindset. The question is, how long will that take to be implemented and transform into tangible results, right? Europe tends to be a slow mover. I mean, MiCA was presented, I think, in 2019 and entered into force 4 or 5 years later, right? And these things take time. I hope by 2030, we're at the point where everything we're discussing now, everything we're hoping now, is then implemented in a way where it actually makes a difference. And again, I'm an optimist, and I still believe that we can get it done, and we will try, all of us, I think, to make it work as good as possible for everyone involved.
In the next 5 to 10 years, one thing I think is going to happen, and we're already seeing this slowly take place, is a lot of these exchanges are going to start applying for MiFID licenses. And that's to Robert's point about the tokenization of the capital markets. If this actually takes off, then the opportunity for them in the tokenized capital market space is orders of magnitude what it'll ever be with altcoins. And so I think that generally, if we can solve for the cash leg and the ambiguities around custody, then on the one side, I don't even know if we're going to have traditional CSDs in the way we have them now. A lot of this stuff may just be directly handled by smart contracts at the level of some, broader AMMs. And I think that the exchanges will definitely get more into tokenized financial instruments by default. And I think that this is also going to be a way to bring a new generation of retail investors on chain. I think we're also going to see a large impact in the real economy with, I mentioned digital product passports before, blockchain for copyright, supply chain automation, and generally the use and conjunction of blockchain infrastructure with AI agents is going to become a norm.
Tommaso, what do you think?
Nathalie, you want to go ahead? Otherwise, I'm happy to somehow.
I can go ahead. 5 years from now is not like super far away. I think CAS, as Erwin already mentioned, I think they will be more established. I think they will dive more into decentralization topics, maybe into NFTs as they grow to understand more of the use cases. I want to kind of give a positive outlook or think positively that I think all the positive aspects the technology allows for will be maybe even funded publicly. Maybe there will be a big fund for projects to provide cybersecurity preserving tools or something. So I think I could see even the EU start investing into it more once they understand. So apart from regulations, I think with the geopolitical changes, the shift will go further away into controlling and more how can we use this technology. So I will actually say maybe not too many new regulations, but actually maybe more public fundings to foster that with specific goals, which might be politically wanted, like cybersecurity or other kind of aspects that are politically wanted. So I can see maybe some public investments coming from that end.
Yeah, I'm happy to conclude mostly by agreeing with most of the comments that were made so far. I think when we look ahead, we understand, for example, especially in Europe, and when we look at the regulatory intervention that has been done in the past 5 years, we know that that strong push is not there anymore to regulate, which can be a good thing, as we were just saying. And then indeed, I think the wishful thinking here is that we start looking, as I think was already said, we start looking at other areas, right? We focus on the financial services, and we understood earlier why it made sense. Well, now we are looking at blockchain and how does that impact the real economy? How does that really allow us to change and revolutionize the services that we're providing and the ways that we're doing things, right? So I think that's really the wishful thinking is that we start looking at, even if there needs to be a regulatory intervention, but a regulatory intervention that is actually enabling this innovation to happen and to take place in all other industries that are not just the financial services space, where obviously blockchain is great for a lot of use cases connected to sending money and all of that, transferring value, owning assets and all of that. And there's going to be indeed a lot of discussions around ownership, which I think is going to be very interesting. So then, yes, let's look at the rest, right? Let's look at the rest of the space. This is why I think it's really interesting to also be working in this industry, in this space, because it's not just one single topic. We're looking at how the whole Web3 space can really drive innovation, can put us ahead in this digital future. And so I think it will be really interesting to see how now this will potentially happen in practice, right? In the next 5 to 10 years, we're hopefully looking at a much higher adoption, both from a retail point of view and from institutional point of view. And that should also come, hopefully, with a better understanding of this whole space and indeed a renewed focus on how can we use this technology for good and for many different industries.
Thank you so much. We're getting closer to the end of that super interesting discussion. We love to have experts coming to BeInCrypto. That's the kind of content that we can read on BeInCrypto.com, and it was a pleasure to have you guys, experts on your subject, to talk on that topic. As a reminder, we talked about blockchain regulation in Europe, security and privacy in blockchain, and the future of blockchain regulation. So thank you guys. Thank you. And thank you also to the audience for following us, reading us, and now watching us. And maybe you guys or guests wants to share your social media where our audience could follow you and keep up with you guys.
For Blockchain for Europe, we have a Twitter handle, which is blockchain for EU. So if you want to follow us there, you're very welcome. We also have a LinkedIn profile that we send out updates. It's a bit different audience where you can find us as well. And I think that's the two handles where you can follow us as Blockchain for Europe.
Awesome. What about you, Nathalie?
You can find me. I'm the most active on LinkedIn. X, I'm just passively watching. So you can find me there under my name, Nathalie Boyke. Yeah. And if you are interested in political consulting or questions in that direction, feel free to reach out.
And Erwin, where do we find you?
So the association is also on X at EUBLAS, EUBLAS, and European Blockchain Association on LinkedIn, and I'm also on LinkedIn, Erwin Voloder. If you have any questions, feel free to reach out to either the association or us, and our website is European Blockchain Association.
Thank you again for making such a complicated subject more understandable with your useful information. It was a pleasure to host a panel discussion with you guys, and don't forget, follow us at BeInCrypto.